everyone. This is CA Shrishti Gosavi, and today we are diving into the world of long-term IPO investments. While the excitement of quick IPO profits is tempting, true wealth often comes from identifying and holding on to companies with long-term growth potential. Let's first understand long-term IPO investing. It means holding on to your IPO shares for years, sometimes even decades, unlike short-term trading where you might sell within days or weeks. Think of it like planting a mango tree. You don't expect mangoes immediately, but with proper care and patience, you could enjoy sweet fruits for many years to come. So, why should one consider long-term IPO investments? A. Compounded growth. Over time, successful companies may provide exponential returns. B. Reduced stress. You are not constantly watching daily price fluctuations. C. Tax benefits. In India, long-term capital gains are taxed at a lower rate of 12.5% compared to 20% for short-term gains, as per Finance Act 2024. Now, let's dive into some key strategies for identifying high-potential IPOs. Number 1. Analyze the company's fundamentals. Look for companies with strong balance sheets, consistent revenue growth, and profitability. Then, look at the company's market position. Is the company a leader in its industry, or does it have a unique competitive advantage? Next, check how strong the company's management is. Research the experience and track record of the company's leadership. Number 2, the second thing to look at is the industry and the market trends at the time. Is the industry growing or declining? Does the company have a room for expansion? Are there any regulatory changes that could impact the industry? Number 3, evaluate the IPO valuation. Compare the company's valuation metrics and industry peers and check its relative performance. Be cautious of overhyped IPOs with inflated valuations. Number 4, read the red herring prospectus carefully. This document contains crucial information about the company's business model, risks, and how they plan to use the IPO funds. This can be compared to reading the ingredient list and nutritional information on a food package. You want to know exactly what you are consuming. Conclusion: long-term IPO investing is about identifying companies with strong fundamentals, great leadership, and potential for sustained growth. It requires patience through research and the ability to see beyond short-term market fluctuations. Remember, the greatest wealth is often built slowly. Now that you have the framework in place, you can use this to analyze upcoming IPOs. But remember, investing in IPOs require a great deal of expertise. So it is always important to do your own research before making any investment decisions. That was all for today's video. Thank you for watching. I'll see you again for another video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.